Imagine for a moment a nation, maybe not defined by its big factories or its, natural
Yeah.
resources, but really by the sheer dedication of its people.
Hmm.
People working far from home, sending back this constant flow, this financial lifeblood.
Mm-hmm.
We often talk about global trade, maybe international aid
Hmm.
as the big drivers of development, right?
Mm-hmm.
But there's this quieter force, but incredibly powerful.
Hmm.
The money sent home by migrant workers.
Yeah, it's huge.
It's not just some footnote in economics, it's this massive phenomenon. It shapes lives, communities, whole national economies. And today, we're doing a deep dive into how this plays out, specifically in the really fascinating case of Nepal.
Absolutely.
So for our deep dive today, we're unpacking the crucial kind of multifaceted role of remittances in Nepal's economy. And when we say remittances, we mean those funds sent by migrant workers back home, usually, to support their families.
Mhm.
These transfers can go through formal routes, banks, money transfer places, or sometimes, as we'll get into, they move through, let's say, more informal ways. But either way, the impact is just massive, especially for a country like Nepal.
And just to really get a sense of the scale here, let's zoom out globally for a sec. The World Bank Group, they tell us that something like $669 billion was sent to low and middle income countries, LMICs, in 2023, just 1 year.
669 billion. Wow.
Yeah, it's an astonishing number. And what's really striking is that it's up 3.8% from the year before. So it's growing.
Okay.
But here's the kicker. Remittances have actually become the single largest source of external financing for these LMICs. They often bring in more money than foreign companies investing directly.
Right, FDI.
Exactly, FDI.
Yeah.
And more than official development assistance, which is basically government aid.
So more than foreign investment and foreign aid combined, often.
Frequently, yes. So for many countries, the money their own citizens send back from abroad is more impactful, it's more consistent, and often more direct than these traditional flows. Human capital, basically people's labor, becomes their most vital export.
That really puts it in a different perspective, doesn't it? It's not just a number. It's about individual sacrifice, collective resilience, really.
Precise.
And when we focus back on Nepal, this isn't just significant, it's foundational. The Nepal Central Bank reported that the country got about $10.86 billion in remittances in the fiscal year 2023-24.
$10.86 billion.
Yeah. And get this, that's a 14.5% jump year over year. I mean, that kind of growth, especially compared to other economic stuff, it just shows how much this financial flow is, surging.
Indeed. And the impact of these flows on Nepal's economy, well, you really can't overstate it. In that same period, 2023-24, remittances made up a staggering 25.3% of Nepal's entire gross domestic product.
A quarter. Over a quarter of the whole economy.
Think about that.
Yeah.
And just to give you an idea of the scale of migration itself, in that same year, about 460,000 Nepali workers got first-time approvals to work abroad.
Wow.
And another, 281,000 got re-entry approvals. So people going back, this isn't just a few folks moving for a job. It's this huge, ongoing, almost institutionalized movement of the workforce. It's driven by, economic need and opportunity.
It basically means Nepal's most valuable export isn't goods, it's people.
In many ways, yes. That's a good way to put it.
So our mission for you in this deep dive is to unpack this really complex, almost symbiotic relationship Nepal has with remittances. We'll look at the history, dig deep into the economic side, look at the societal impacts, the good and the bad, and then think about, the path forward. By the end, you'll have a really solid grasp of why this flow of money is truly Nepal's economic hope, and maybe even how it sets a kind of unique example for development today. So let's get into it.
Let's do it.
To really understand what's happening now, the sheer size of these flows we're talking about, we kind of need to go back in time a bit. Nepal's history of people working abroad isn't new at all. It goes back over 200 years.
That's right. For centuries, yeah.
Individuals from Nepal have been seeking work overseas, sending money home to support their families. It's this deep-rooted thing born out of necessity, aspiration, way before we talked about globalization or even remittances.
Absolutely. And while the tradition is old, the scale and the scope have just exploded in recent decades. In the early days, you had Nepalists joining the Gurkha regiments for the British, the Indian armies, sending earnings back.
The Gurkhas, right?
Exactly. Later, colonial era, many went to work on tea plantations in India, logging in Burma. That set a pattern. But then, late 20th, early 21st century, especially after Nepal opened up its economy more, this migration just went global.
So where are people going now, mostly?
Well, Nepalese workers are now all over. But huge numbers are in the Gulf Cooperation Council, the GCC nations, Saudi Arabia, Qatar, the UAE, also Malaysia, big time. And of course, India, still a major destination given the proximity and history.
And what's driving this modern surge?
It's a mix of things. A persistent lack of enough good jobs at home, the attraction of higher wages abroad, even for less skilled work, and just the demands of the global labor market in fast-growing places. It's moved Nepal's labor market from kind of traditional local patterns to a truly global one. They're in construction, manufacturing, services, security, you name it.
So this long history, it's not just background noise. It's really shaped the country's economic DNA.
Profoundly so.
It makes you think, doesn't it? How does more than 200 years of this outward movement, this constant flow of people and money, how does that fundamentally shape a nation's identity, its society, its whole relationship with outside income?
It's woven into the fabric.
Yeah. It's not just about the big economics. It's culture, family structures, communities adapting, thriving around this constant movement. It says a lot about, human spirit, ingenuity.
It absolutely does. And on the economic front, the scale is just, well, it's the backbone. To repeat those numbers again, 2023-24 remittances hit about $10.86 billion.
$10.86 billion.
And that, as we said, is over 25.3% of GDP. And crucially, this amount surpasses the combined money coming in from official development assistance, foreign aid, and foreign direct investment.
Okay, so it beats aid and foreign business investment combined.
Yes.
Oh.
Which is really unique. For most developing countries, FDI or ODA are seen as the main external funding sources. But for Nepal, its own diaspora, its citizens abroad, are effectively its biggest, most reliable investor. It flips the traditional development model on its head.
Okay, let's try to really grasp this. Imagine your own household budget, right? All your income for the year. Now imagine more than a quarter of it comes directly from family members working overseas. That's the kind of scale we're talking about for Nepal as a country. It's not just extra cash. It's the fundamental economic structure. The implications of relying on that so heavily are huge. It affects everything. Consumption, national reserves.
Absolutely. It means remittances aren't just supplementing income. For a huge part of the country, they are the income. And having that large, steady inflow of hard currency, dollars mostly, acts as a massive stabilizer.
And you mentioned stability. How does it compare to, say, FDI or aid in terms of reliability?
Well, that's what's really interesting. Remittances tend to be much more stable and consistent. FDI can be very volatile, right? It depends on global economics, investor mood swings. Aid can change based on donor politics or priorities.
Right.
But remittances, they're driven by people's commitment to their families. That tends to be much more resilient. Look at the first 8 months of the current fiscal year, 24-25, ending mid-March 2024. Inflows were up 9.4% in Nepali rupees.
9.4% growth. Still strong.
Yeah, reached over 1 trillion rupees. Even in U.S. dollars, it was up 6.9%, hitting $7.74 billion. This consistency makes remittances maybe the most reliable source of foreign currency for Nepal. It's a cushion against shocks, helps the balance of payments, keeps foreign exchange reserves healthy. It's like a steady river in a sometimes stormy global economy.
So we've got the big picture, these huge numbers showing Nepal's reliance on its diaspora. But let's bring it down to the ground level. What does this actually mean for families? How does this money really change daily life inside homes across Nepal?
Yeah, this is where it gets really tangible, where the stats become, lived reality. For millions of Nepali households, remittances are the main source of income. They don't just fill gaps. They let families meet daily needs, significantly improve their living standards, and this is key, invest in things like education and healthcare.
So not just survival, but improvement.
Definitely. The Nepal Rashtra Bank, NRB, the central bank, they found that families getting remittances consistently spend more on essentials like food and clothes. But importantly, they also spend more on things like education, personal care, even recreation. That points to a real jump in quality of life, moving beyond just getting by.
Can you give some specific examples, like education?
Sure. The World Bank highlights education specifically. A big chunk of remittances goes there. Think about a rural family, maybe for generations, kids only went to primary school, if that. Now, with remittance money, they can afford better schools, maybe private schools, or support kids through higher education or vocational training that would have been impossible before. The long-term impact on human capital is potentially massive. A more educated generation, better job prospects, it could break poverty cycles.
And what about things like housing?
That's another huge one. Remittances are very often invested in real estate, buying land, building, or improving houses. This isn't just a financial investment. It reflects this deep cultural drive and aspiration for migrants to provide secure, stable housing for their families back home.
A tangible result of their hard work.
Exactly. It's about security, social status, leaving a legacy. For many, building a house is the ultimate symbol of their sacrifice and success abroad. It's foundational.
That's a powerful point.
Yeah.
It really underlines that remittances aren't just about keeping heads above water. They're about aspiration, upward mobility, securing a future, giving the next generation a better shot. That personal story, times millions, is what's really driving these huge financial flows.
Precisely. It's investment in hope, really.
So let's talk about the trend, the trajectory of this money. We've mentioned the volume, but that consistency and growth pattern are just as important. You mentioned 9.4% growth recently. That's part of a longer trend, right?
Absolutely. If you look at the data, say the graph showing remittance inflow in U.S. dollars from 2013 to 2023, you see a clear overall upward trend, a steady climb over that decade.
Despite maybe some bumps.
Yeah, there are minor fluctuations year to year. You might see a dip or surge maybe due to big global events like the early days of the COVID pandemic saw a brief worry, but then a strong rebound or shifts in labor demand in specific host countries.
Yeah.
But the general direction is undeniably up and steadily so.
So the pandemic didn't cause a lasting crash like some feared.
No, interestingly, the resilience of the workers and their families, plus some government efforts to encourage formal channels, meant it bounced back quickly. This long-term consistency is really key for Nepal's economic stability. It provides that predictable flow of foreign currency, helps planning, supports imports. It's not a fluke, it's structural, enduring.
Here's where it gets really interesting. This isn't just a temporary boost. It's this sustained, powerful current that's been building, really transforming the economic landscape. It shows how deeply embedded this is. So where's all this money actually coming from? Which countries?
Right, the sources. Let's break down that geographical distribution for, say, fiscal year 2023-24. The data gives a pretty clear picture. Saudi Arabia is at the top, providing about 20.6% of the total.
Okay, Saudi Arabia, big one.
Yeah, reflects it being a massive destination, especially for construction, oil and gas, service jobs. Then, almost neck and neck, is Malaysia at 20.5%, another major hub for Nepali labor manufacturing, plantations, services like factories, hospitality.
And India, you mentioned that's a traditional destination.
Still very significant. India accounts for about 19.3%, but here's an important point. A lot of the flow from India is thought to be informal.
So harder to track.
Exactly. Person to person, maybe through informal hawala or hunda systems. It serves a purpose for families, often quicker, maybe cheaper, but it bypasses the official financial system.
Okay, who else is on the list?
Then you have Qatar at 13.4%, another big Gulf destination, construction services. And interestingly, the United States is becoming quite significant at 11.6%.
The U.S. How come?
That seems to be more driven by skilled migration, professionals, and also a growing Nepali student population who often work part-time and send money home, maybe to help family or pay back loans.
That's a really diverse mix of countries, from construction in the Gulf, factories in Malaysia, the informal economy in India, skilled jobs in the U.S.
It is diverse.
What does that mean for Nepal's economic resilience? Is it good to have sources spread out, or does it mean they're vulnerable to shocks in many different places?
Well, it's a bit of both, really. A double-edged sword, as they say.
Yeah.
Diversification can cushion against a downturn in one specific region, but it also means exposure to a wider range of global issues. Oil prices affecting the Gulf, manufacturing demand affecting Malaysia, U.S. economic shifts.
And those cultural ties, like with India, must play a big role in facilitating movement too.
Absolutely. The open border, long history, cultural similarities make movement to India much easier, which also reinforces those informal remittance channels we mentioned. And those informal channels pose challenges, for tracking, for policy, for leveraging that money for bigger national goals. It also means less protection sometimes for the senders and receivers.
Let's try to visualize this again. The sheer scale within Nepal's own economy. There's that chart. Remittance share in Nepal's economy, FY 2023-24, it really puts it starkly.
It does.
It shows, 24.7% is remittance inflow against 75.3% other GDP components.
Yeah.
It's not just a little slice, it's a huge critical piece of Nepal's economic pie. Nearly 1/4 of everything produced or earned in the country comes from citizens working abroad.
Exactly. That visual really drives home the point about external financing. As we keep saying, these inflows often dwarf FDI and ODA combined. Nepal is in this unique spot where its diaspora is its biggest investor.
What are the strengths and weaknesses of that model?
Well, the strength is the volume, the consistency, and the direct impact on poverty reduction at the household level. It injects cash right into local communities. The vulnerability, though, is the heavy reliance. Nepal's economic health becomes closely tied to the economies and labor policies of other countries.
So recession in the Gulf or changes to visa rules in Malaysia.
Could have immediate, potentially devastating effects back in Nepal. It's like a farmer relying entirely on a single crop, very vulnerable to specific problems.
It really makes you think about how Nepal funds everything, public services, roads, hydropower, development plans, knowing such a huge chunk comes from its citizens overseas. It's a mix of incredible opportunity and, well, inherent risk.
Resilience and vulnerability, side by side.
Okay, let's pivot to the impacts more directly. We know it's big money, but how does it really affect things like poverty?
Well, this is clearly on the bright side. The impact on poverty reduction is profound, well documented. The World Bank, for instance, points out that remittances have been a major factor in bringing poverty down.
So we have numbers on that.
Yeah. The national poverty headcount ratio, the percentage of people below the poverty line dropped significantly, from about 25.2% in 2011 down to around 17.7% in 2022. That's a huge drop in just over a decade. Millions of people lifted out of extreme poverty.
Wow, that's a massive improvement.
It really is, and remittances are seen as a key driver behind that success.
That's a real aha moment there.
Yeah.
It's not abstract. Remittances are literally pulling people out of poverty. You can imagine what that means for a family. Better food, better housing, access to healthcare they couldn't afford before.
Exactly, and there's data to back that up too.
Right.
An NRB working paper from 2021 found that households getting remittances are statistically much less likely to be poor. It's a direct, measurable impact on well-being.
And beyond just poverty, does it help stabilize things for families?
Yes, absolutely. Remittances act as this crucial stabilizing source of income, especially for vulnerable households.
Yeah.
Think about it. Nepal faces risks like bad weather hitting crops, natural disasters, local economic slumps. Having that steady flow of money from abroad provides a vital safety net. If the harvest fails or a local job disappears, the remittance can prevent a family from falling back into crisis. And if you look at the graph comparing remittance trends with household consumption,
Yeah, what does that show?
it shows a pretty clear connection. As remittance inflows have generally gone up, so has household spending. This suggests a lot of the money is used right away to improve daily life, buying goods, services, improving homes. It fuels local economic activity.
Okay, so definite positives. Poverty reduction, stability, increased consumption.
Yeah.
But you mentioned a double-edged sword earlier. What's the downside?
Well, this is where it gets complicated, as you say. Bringing in lots of money can sometimes create its own set of problems. One major one is inflationary pressure.
Prices going up. How does that work?
It's basically demand pull inflation. Remittances boost incomes, people have more money to spend. But often the domestic supply of goods and services, especially things like housing in cities, quality education, certain consumer goods, doesn't increase fast enough to meet that new demand.
So, too much money chasing too few goods.
Pretty much. That pushes prices up. We see it very clearly in urban housing markets. Remittance-fueled investment in property is a big factor driving up prices, especially in places like Kathmandu.
So families with remittances can afford to build or buy, but it makes it harder for everyone else.
Exactly. It can drive up the cost of housing and land for people who don't receive remittances or those on fixed incomes. It can actually widen the economic gap within communities, even as overall wealth seems to increase. It creates real affordability challenges.
Is there data showing a link between remittances and inflation?
Yes, there's a graph comparing remittance inflows and inflation rates, and you can often see a correlation. Periods of high remittance growth tend to coincide with upward pressure on inflation. It's a tricky balancing act for policymakers. How do you get the benefits without letting inflation run wild and erode those very gains?
It really highlights the complexity. Okay, another potential issue. What about reliance? Can a country become too dependent?
That's the core of what's called dependency syndrome. It's when households and then the whole national economy lean so heavily on remittances that it might actually reduce the drive to create productive jobs or businesses within Nepal.
How does that play out?
Well, look at the numbers again. Remittances are nearly 25% of GDP, right? But domestic job creation is often described as stagnant. The economy isn't generating enough diverse, high-value jobs internally to keep its workforce at home. So migration becomes the main path to economic improvement for many.
Which then fuels more remittances. It's a cycle.
It can be, yes. It creates this structural imbalance where external income feels more reliable or accessible than building something locally.
What are the long-term risks of that? If your best and brightest or just your most energetic workers are always looking outwards.
It definitely raises concerns about local innovation, the growth of small businesses, diversifying the economy away from just remittance-fueled consumption. It reduces the motivation, perhaps, for certain types of local economic activity.
And it makes the country very vulnerable, right? If something happens in those host countries.
Hugely vulnerable. A major recession in the Gulf or Malaysia, or a big shift in their immigration policies. The impact on Nepal could be immediate and severe because so much household income relies on those external factors. It really pushes the need for developing more internal economic strength, building an economy that isn't quite so reliant on the human export model.
That makes sense. Beyond the economics, though, what about the human cost? The social side?
This is crucial and often less discussed than the economics. A major issue is brain drain. We're talking about skilled and unskilled youth, often the most productive age group, migrating in huge numbers.
Leaving a gap behind.
A significant gap. They send money home, yes, but their physical absence depletes Nepal's workforce, potentially impacting sectors like healthcare, education, even agriculture. The numbers are staggering: over 4.5 million labor permits issued between 2008 and 2023. That's a huge chunk of the prime working age population.
That affects the quality of services, the potential for new ideas.
Absolutely, and it leaves behind an aging population and a smaller pool of talent for domestic development.
And it's not just about the workforce, is it? It's about families being separated.
That's the profound emotional and societal impact. It's families split apart, kids growing up potentially years without a parent present, communities losing their most dynamic members.
What does that do to the kids, the elderly left behind?
There are real concerns. Reports suggest rising social and psychological issues. For children, maybe issues with school, lack of supervision, or emotional support, even with more money around. For the elderly, loneliness. There are reports of emotional distress, even marital problems linked to long separations.
So even as remittances bring economic benefits, they create these social strains.
Exactly. It's a tough balance. How do you weigh the clear economic gains against the potential erosion of social cohesion and family well-being? It forces a hard look at the trade-offs.
And the long-term question is, how do you build a strong, self-sufficient society and economy if so many key people are physically absent? It's really complex.
It truly illustrates that economic fixes often have deep social consequences.
Okay, so given this complexity, how is Nepal trying to manage this? What are the institutions involved in steering the ship?
Well, there's a framework in place. Key players include the Nepal Rashtra Bank, the NRB, that's the central bank. They regulate the formal remittance flows, the banks and money transfer operators to ensure things are secure and transparent.
So overseeing the formal channels.
Right. They issue guidelines, promote secure banking and digital options, and use monetary policy to help stabilize the foreign exchange reserves, which, as we know, are heavily boosted by remittances. Bringing that money into the formal system is crucial for them.
Who else?
Then you have the Ministry of Finance, the MOF. They handle the government's budget and fiscal policy. They factor remittance trends into national planning, obviously. But they also try to promote ways to use remittances more productively. For instance, promoting special investment options like diaspora bonds, trying to attract NRN's non-resident Nepalists to invest back home. They might also offer tax incentives for businesses started using remittance money, especially in priority areas.
Trying to encourage entrepreneurship.
Exactly. And then there's the Foreign Employment Department, DOF. They focus more on the people, the migrants themselves, overseeing safe migration practices, legal documents, trying to prevent exploitation.
Protecting the workers.
Yes, and negotiating bilateral labor agreements with host countries, trying to get fair wages, safe conditions, secure ways to send money back. They also manage welfare funds and insurance for migrants, providing a safety net. So these three bodies, kind of working together, try to guide this flow.
It sounds like a massive coordination effort, trying to guide this huge river of money, making sure it helps individuals but also serves bigger national goals. Must be incredibly complex.
It is, and they do have specific policies aimed at these goals. For example, the recent monetary policy for 2023-24 specifically talks about promoting remittance investment accounts.
What are those?
The idea is to offer accounts that give better returns than just regular savings, to incentivize people to formally invest the money rather than just spend it immediately. They also explicitly push for expanding formal channels, especially into rural areas.
Getting banks or digital services out to more remote places?
Right, because informal methods often dominate there simply due to lack of access. So more rural branches, mobile banking agents, digital tools.
Are there other specific initiatives?
Yeah, another interesting one is Remit Hydro and Investment Ltd. This is a government-backed effort to get NRNs and returning migrants to invest their remittance savings directly into infrastructure, particularly hydropower projects.
Ah, tapping into Nepal's hydro potential.
Exactly.
Yeah.
Nepal has huge potential there. So this aims to mobilize diaspora savings for crucial energy development. It's a clear attempt to shift funds from consumption towards long-term productive assets for the country.
That makes sense. The goal isn't just to passively receive the money, but to actively channel it, make it work for Nepal's future, moving from just getting by to actually building something sustainable.
Precisely. From receiving a gift to cultivating a garden with it, as you put it earlier.
But you also mentioned the big challenge remains. Too much goes to consumption, not enough to investment, and informal channels persist.
That's the core challenge, yeah. While consumption is vital for lifting people out of poverty day to day, it doesn't build the long-term economic basisation. Nepal needs the jobs, the industries. And yes, despite efforts, informal channels are still common, especially from India, often due to lack of awareness, perceived complexity, or just lack of easy access to formal banking in some areas.
So back to that analogy.
Yeah.
How do you turn the Momo money, delicious, gone fast, into investment money that builds lasting value?
It's the million-dollar, or rather billion-dollar question. The proposed solutions are multifaceted. Firstly, policies that actively channel funds towards productive assets, encouraging investment in agriculture, hydropower, SMEs, small and medium businesses that create local jobs, maybe even strategic real estate, beyond just housing.
So directing the flow.
Secondly, things like those remittance investment bonds or maybe match funding schemes. Basically, making investment financially attractive, perhaps offering government backing or matching funds for certain types of national development projects, making it appealing for families to invest long-term.
And what about the people coming back? The returnees?
That's the third prong. Really incentivizing returnee migrants to invest their savings and skills. They bring back capital, often new expertise, international perspectives. Can we leverage that for domestic development? Turn the brain drain into brain gain or brain circulation.
So on a practical level, what's the key message for the average Nepali citizen involved in this, sender or receiver?
Financial literacy. It's absolutely crucial. It's not just about getting the money, it's about knowing how to manage it wisely.
Budgeting, saving, investing.
Exactly. Community-level training on those practical skills. Understanding the different options beyond just spending it. Empowering people to make informed choices for the long term. This needs collaboration, NGOs, banks, local government to provide access to tools, advice, especially in rural areas. And critically, this education needs to reach both the senders abroad and the receivers at home.
Makes sense. And linked to that, you mentioned fostering entrepreneurship.
Yes, the vision is to create an environment where returnees, with their capital and skills, see viable opportunities to start businesses back home.
Like startup programs for them.
Precisely. Incubation programs using remittance capital as seed money, maybe tax breaks for returnee-led businesses in priority sectors, subsidized loans, business literacy training offered alongside migration support. The idea is to help them become job creators, not just job seekers, leveraging their unique experience.
So all these policies, the financial literacy, the entrepreneurship support, it all aims at shifting Nepal towards being more self-reliant, more sustainably developed.
That's the overarching goal. Leveraging this incredible resource, the dedication and earnings of its global workforce, not just to survive, but to build a stronger, more diversified internal economy for the future, shifting from managing inflows to actively cultivating growth from within.
Okay, so wrapping up this deep dive, it's just incredibly clear. Remittances aren't just some economic statistic for Nepal. They are genuinely a lifeline.
Yeah, absolutely.
Consistently over 22%, sometimes 25% of GDP, directly reducing poverty, boosting spending, propping up national reserves. It really is an economic backbone, built by millions working hard overseas.
And while the institutions, NRB, Ministry of Finance, DOV, are working hard to streamline channels, implement policies, harness this flow, major challenges definitely remain.
Yeah, the challenge of getting the money into productive investment instead of just consumption seems central.
It is. Plus, the risks of dependency and the difficulties in making policies really work effectively everywhere, especially in rural areas, and dealing with those persistent informal flows.
Ultimately, though, this deep dive really shows that remittance isn't just about money. It represents the economic hope for millions of Nepali families, their resilience, their ambition, their connection to home. But the real challenge, and maybe the real opportunity, is how Nepal transforms that hope. How does it turn that steady stream of support into a powerful, self-sustaining engine for national progress?
That's the key question. To really drive sustainable growth, Nepal has to evolve this relationship. Remittances need to become less of just a consumption tool and more of a foundation for investment, for innovation, for inclusive development right across the country.
So channeling it strategically, fostering entrepreneurship, building that financial literacy.
Exactly. The future really hinges on that transformation. Can Nepal leverage this unique diaspora advantage to build an economy that's not just resilient to outside shocks, but one that generates lasting prosperity from within? And that's certainly something worth thinking about, not just for Nepal, but as we consider global development and economic resilience everywhere in the 21st century.